Leigh Brown. This is Crazy Shit in Real Estate. I am bringing to you one of the biggest insurance experts in the planet. And she's all about the state of Florida and about the United States. She has been very involved with the National Association of Realtors in the insurance side. She knows everything FEMA inside and out. So strap on with your notebook and pad and your seatbelt. Cyndee Haydon is with us. This is part 1. And we are definitely going to put together a part 2 and 3 because this conversation is going to make you ask some questions. I'll see you on the other side.
Girl.
Every conversation. Let me make sure. All right. We have until 10:30. So let's see how much we can knock out in 40 minutes, y'all. So you got to understand, this is probably going to be a part 1 episode because Cyndee is a ridiculously in-depth repository of information about real estate and insurance. And we could talk about this for probably 16 hours and you'd still only scratch the surface because it is one of the biggest issues that is talked about, tiny, tiny snippets at the edges. It is not in the center of the room and should be. And that's why we have got Cyndee Haydon here. And so Cyndee, before we dig into the weeds of insurance, remember part of our audience is consumers. And so we had to be careful not to get too deep into the real estate weeds, but the realtors, y'all just got to hang in there. Cyndee, tell them where you're located, how long you've been in the business. Give us a little bit of the Cyndee Haydon story.
Okay. I got in the business in 2005. So, I'm an optimist. So as the market's tanking, my husband and I both left IBM and said, hey, now's the time to get into real estate. So
hey, but 20 years is next year. You got a big anniversary coming up.
Exactly. Do you think that as we talk about today, I moved every 2 years growing up. And so I had an understanding of the importance. My parents always teacher and an engineer, but they always bought the best house they could afford to give us a good education and the best opportunity for the future. And so the other thing that happened that really has had an impact on me was before my husband and I moved to Florida in 1991, back to Florida. I'm a native Floridian, but I moved all over. As I said, we lost everything in a house fire on Christmas Day. And so most people, when we talk about insurance and people sort of think, and you talk about it could be geeky, it could be details. But when you've been there and lost everything, and luckily we had good insurance and we were the only people in our neighborhood, right, that lost it, that we could get a contractor, we could find a place to rent. And then in 1992, when Hurricane Andrew happened in Miami, my best friend from college was down there and I saw her family, they were lucky. They got a motorhome and they were in the front yard for 2 years. So all these things have formed my passion, and sometimes again, people ask like, are you into this because it's a hot topic? I'm into it because I know it matters to families and that I pray that nobody ever has to go through it. But my passion is to make sure everybody's protected should they have to.
Cyndee, how is it that with all of your brilliance, you have never jumped on them saying it's a hot topic by saying I experienced a house fire, so it is a hot topic for me? Come on, girl.
Well, you know what? I need to come to Leigh Brown to get the talking point. So I will say I'm a mama of 2 boys. And my youngest turns 23 today. It's his birthday.
Oh,
yeah. And my husband and I celebrate 38 years of marriage next week. So we've got, again, our family is amazing and I couldn't do anything without them and their support. And basically we moved here 1991. We were working for IBM. They were downsizing. They said, hey, your next job's in Dallas. I said, hey, it's not. I live where people want to be their whole life. So my husband and I both asked, they were given buyouts because they didn't lay people off back then. And they wanted people to voluntarily go. And back then we were making 6 figures. People in Tampa were not leaving a 6-figure job. They were pets in place. And so we were like, we'll go. And the reason was my husband started when he was a baby. His mama worked for him and we got health insurance and we knew that we could earn a living, but health insurance could bankrupt a family. Right. And so the next day we finally at the end, they didn't have enough volunteers and they were like begrudgingly like, okay, we actually did some consulting right back to them for a while. But eventually, again, we wanted to have kids, be in the area, not be traveling. And so that's kind of how that whole journey happened.
So, okay, there's going to have to be like 2 follow-up episodes, I can already tell, because there's so much to be said about the trauma and the excitement of relocating.
Yes.
And what happens when people say no to it? I mean, I said no to a 3rd relocation with Husqvarna, which is part of how I got out of there and got into real estate because I like, you can't move me every year. I will never get married. I will never have kids.
Right.
And I needed to get that phase of my life going on. And it was the end of the road, not saying yes, just like you're realizing that Dallas or here. But yay, you chose home. And then Andrew came the next year. I mean, good job. So you stayed long enough to get to the biggest hurricane in Florida history until recently.
Right. No, but the thing is that I married a man who'd never moved his whole life. So God bless him, because when we were like engaged and I said, I'm not staying in Lexington, Kentucky. And so we again went to Philly, but I was able to work my way back to Florida. But I did grow up mostly in Florida. My parents were, I don't know, a little schizophrenic. We'd be Florida, Ohio, Florida, California, Florida, Texas.
Oh.
So they moved my senior year and I came back to the University of Florida.
I love you anyway. Go Knowles.
But I love where I live, and that's a blessing, and so I love being able to help other people, though, find their sense of community, because that's what relocation teaches you, right? Is that people are coming and they don't have the infrastructure, the friends, the connections. And so I love knowing and being that for people, whether they're buying a second home, whether they're buying a vacation rental, or whether it's a permanent home, they still have all those same needs and someone they can trust long after the sale.
I mean, that's a realtor superpower that, frankly, has not been brought up in any of the nastiness going on around the attacks on organized real estate, is how a truly superpowered realtor, and it's not everyone, do not misunderstand me. I'm not saying that every realtor has that superpower, but the ones who do, who can drop somebody into a community and help them integrate faster, you can actually change their life trajectory by helping them not feel completely out of place.
Absolutely.
And probably for you, it came from having experienced it so many times, but you couple the experience of it with the love of where you live, which I do think that is a very common realtor characteristic, that we love where we live enough to say, you're going to love it too. This is great. Come on. This is great. You're going to love it. And people need that enthusiasm and that encouragement in life. And when we think about enthusiasm and encouragement, it's kind of hard to segue into insurance, because you buy insurance because you have to. And you pray you're never going to need it, and you're mad that you pay premiums on it until the day that you need it, and then you're glad to have it.
I can tell you how it plays into community is that I have always had the respect and the care for my clients to want them to make smart decisions for themselves. And so when people are not wanting to tell people about flood insurance and not wanting to tell people about risk, I am like, here it is, eyes wide open. I mean, if it's good, like I pay it. I mean, and again, if you're not comfortable, we'll find you something where there's a different risk level. But I'll tell you, the funniest one was a family like a couple of years ago, after Bigger Waters. I mean, after the new risk rating 2.0 pricing came out, he wanted to buy a home in Treasure Island. And I knew the flood insurance was going to be pushing the upper limits. And I said to him, but he was paying cash. And I said, before I write the offer, you need to go get some insurance quotes and make sure you're still comfortable. And that flood insurance was $11,000. And he's like, that's about what I expected. I was like, well, let's get busy. But my point is, when you tell people the truth, when you tell people what's coming, then they can make the right decision for their family. It's when they don't have all the information. I talked to a commissioner in a local beach town that's kind of been picking my brain because she's trying to do some work. But she said, I would have never bought my 1,300 square foot, 2-bedroom, 2-bath house if I knew this 50% and I knew there was a look back and I knew that I was at risk of losing it every day. And I was like, yeah, that's the problem, right? Is that very few realtors even know it, even consumers know it. And that's where, I have a passion for, at least in our state, trying to help, in our country where people look, like, help educate people. Because if you know the information, then you make the decision that's right for your family.
Exactly. And I think that's the hiccup. There's desire to help. There's the lack of information from the consumer. And does the realtor know all the details on insurance? Does the consumer understand how it works? And there's an understanding gap more than anything else. And for the sake of you out there who are thinking about buying a house, because I know I have a lot of future homeowners in the audience, when you're talking about homeowners insurance and flood insurance, usually you buy those because your bank tells you you have to. It does not become something that you can think about and mull over and pray over. If you're getting a mortgage, the bank says you're going to insure the house, you're going to have flood insurance if you're in a flood zone, which, well, we can talk about how flood zones are made up by the government, but the reality is if it's in one, you've got to carry it. And so from a real estate perspective, when we talk about your monthly payment, this is why we don't want you looking online to get a bid for your mortgage, because the online companies will tell you principal and interest. So the amount that you're borrowing and the interest rate. And that's what most people talk about. But there's two more components to that payment. You have taxes. That's the property taxes of where you are. Another reason to have a good realtor, because they'll tell you if that's up for discussion, if it's going to move, because that can jack your payment big time. And then insurance. And I have been very disappointed by how many realtors insurance doesn't even cross their minds, Cyndee. They're helping people figure out payment structures or helping them think about, can I afford to stay in this house? Because for me, if I'm talking to a buyer, I don't care about the price point. I care about the payment. Can you stomach this payment? Can you go out to eat and go to the beach one weekend a year and keep your life in order with this payment? And by the way, the T and the I, the taxes and the insurance are going to move, especially the insurance. And so I worry now that we have consumers buying houses that they won't be able to afford 2 and 3 years from now because insurance is moving. So with that little piece of understanding for the audience, let's talk about, well, let's just start with the 2.0 risk rating and talk about flood zones a little bit, because there is a misunderstanding in the media, in common talk, that flood zones are basically the areas next to rivers and oceans where everything floods all the time. But as my favorite flood person says, if it rains where you are, it can flood. I mean, heck, we're now in the aftermath of Tropical Storm Beryl in Houston, and you've got more flooding down there with people who are not in the flood zone. So talk to us about that. As a Floridian, you've got as much flood zone in Florida as anywhere else in the country. So tell us a little bit about how to think about that if you're a consumer or a realtor.
Can we just back up one event? Because in 2012, Congress unilaterally changed flood insurance and said, okay, we're losing a lot of money, so we're just going to make it actuarially accurate immediately on sale and on anything that's sold 6 months prior. I think that's a really important foundation, because I had a veteran who'd bought a house in that 6 months prior. So, I told you, I tell people the truth, but that truth didn't even exist. And so we get noticed, and basically his insurance went from $1,400 to $14,000, no ability to escrow, one payment, $14,000. This is an important piece of what I'm going to tell you that's coming next. So the realtors got involved, and we were able to get that repealed. And what we did was we came out with the idea of a glide path to say, again, it goes up 18% if it's your primary, 25% if it's your secondary. But it was a way to say, it's like a frog. You throw them in boiling water. But it was like, okay, how can we get there but not make people lose their homes, right? And so I say that, and why it's important is because the government doesn't always understand the impact of their decisions like we do. I know that's such a surprise, Leigh. I know, crazy stuff. Crazy. I'm so crazy. And so then we're going to have risk rating 2.0, but then I'm going to tell you the thing that keeps me up at night. So we as realtors, I'm so proud of the work. And a lot of people, they don't know. Well, and here's the point. The 14,000 is the actual rate. So the question is, how did we get there? And over time, it is going to be more. And so anyway, risk rating 2.0 comes out, and we worked 10 years with FEMA, NAR did. And when it did, our goal was to make sure that we were moving into a sound financial system that would last for people, because if you don't, on the private market, it's a lot more expensive, and that we didn't have people lose their homes like we learned from Bigger Waters. Okay. So when it came out, and I've heard a lot of people frustrated, et cetera, but the bottom line is, I went around this country for 2 years, and to this date, and even we're ground zero for the most free firm policies in the country in Pinellas County, because I'm in the Tampa Bay market, Madeira Beach. I didn't tell you all that earlier. So even my own association was a little bit bristly, thinking that this was a bad thing, and trying to a little bit like did some research and saying, against it. At the end of the day, not one person lost their home, not one deal, not one complaint. And so is it perfect? No. Would we all wish that some, magic fairy would wave a wand and we didn't have to pay it? But the reality is, I think we were very successful in accomplishing the goal, which was to keep people in their homes, to keep the ability to buy homes still in place, but to gradually be moving towards that. And so I say all that because, there's been states that have sued and different things. And again, there is another show about the 3 caps in risk rating 2.0 that I may be one of 3 people in the country that even knows, which is a shame, but I'm just saying. But for now, let's just say risk rating 2.0 is keeping people able to buy homes, and it's not throwing people out of their homes. Because in our state, 18%, we look at homeowners going up 50 and 100%. We haven't had that same protection. So we'll get to that. But let me just you talked about the rain and precipitation. So at the same time in 2021, as risk rating 2.0 was coming out, President Biden did an executive order, and he told the Fannie and Freddie, FHFA, that they needed to underwrite for climate financial risk. And so for me, having been through bigger waters, that makes me very nervous. And so as chair of NAR Insurance, we had a work group because I said, to me, I had 3 questions. Everybody throws around words. So what is climate financial risk? Does it exist? And then how could it impact housing affordability? If they underwrite, what are the ways that it could come at us? And we did a white paper, and interestingly enough, exactly what you said, when you hear 40% of floods happen outside of a flood zone, it's because FEMA has never accounted for rain and precipitation. So look at the Fort Lauderdale airport. Every time it rains, it's underwater. Look at Orlando. Look at the places you're talking about. Houston's a perfect example. It's a bowl. So then you look at, for me, it was an eye opener to say, as much as I wish it weren't true, there is 40% or more risk not accounted for. So then you say, well, how could it impact us? And what's interesting is there's a company called First Street Foundation. They do the flood factor and risk factor. Consumers might see their information on realtor.com or other sites. But they did a study, just to give you a perspective. Right now, we have 5 million homes that are in that mandatory flood area. If you have a mortgage, you got to carry flood insurance. They analyzed and said there are 10,000 more that should be. When that happens, when that designation happens, as you know, maps get withdrawn and all this kind of stuff, that's 10,000 families that are going to be looking at flood insurance mandatory. But more importantly, what comes with that, and I often say to people, I would gladly pay the flood insurance for the ability to repair and maintain my home. So when you're in the mandatory flood, you get under FEMA's 50% rule, which is what is causing me to stay up at night right now. That we'll talk about the 50% rule. But anyway, so 2 big things coming. One is climate financial risks. So we looked at it as a committee and we said, probably the easiest way to underwrite would be if you had flood insurance mandated for all government-backed loans. Then you'd know that everybody's covered and you'd spread that risk. But otherwise, you're looking at extra fees or extra interest rates or ARMs or portfolio loans or not getting loans by the government. And so the reason that I take it so seriously, and some people want to say it'll never happen, but I look at in our country right now, there's a few major investors that own a lot of real estate and buy a lot of government-backed mortgages. So when they say, and we've seen them do this in other industries, I'm not going to invest if you're not this. When they say that, what happens to the consumer access to mortgages? Because who are they selling it to if they say no? And again, you cannot negate that there is a real risk. So the question, and what my prayer is that we are part of the solution, that we have a seat at the table to say, okay, if we're moving in that way, if there is more risk, how do we do it in a way that's not like bigger waters, not a hand grenade in housing?
Oh, a hand grenade in housing. That's a really good visual way to put it. So then with what you're talking about with spreading out the risk, and obviously there's pros and cons to that. We know that the flood program as it currently exists is just not sustainable, but our elected officials and the letter agencies have refused to get the reform done in the last 25 years. But you're talking about these large hedge funds that have massive investment in real estate portfolios. Is that where that executive order came from? Was it coming at the behest of those hedge funds to lower their risk under that phrase climate financial risk, which was obviously to use the right buzzwords to get something to go through? We all know how that works. Is that who asked for that executive order? Have you ever dug into that trail on that?
Well, President Biden does not talk to me or consult with me on, how he's coming up with stuff.
He would be doing much better right now if he listened to you, just for the record.
I do think that, again, and that was part of my concern when it came out, was I don't even know sometimes climate financial risk. What's the definition that we're all using, right? What is that, right? I'm not even sure my definition is their definition. I'm just saying that when we looked at it, I can agree there is a segment that FEMA has never addressed. So there is some. Now, whether they see it as bigger, whether they see other things, I will tell you that that is just flood, which obviously is the biggest risk, and all 50 states have flooding events. But look at what's happening with fire, with actually, surprisingly, First Street Foundation estimated 39 million homes are at risk from wind damage, right? And so as you look at it, I'm talking flood, they're at, 15 total, and you got more than twice that with wind. And so the concern, I think you're jumping into the logical next step is, does it stop with this 10 million more in flood? This thing theoretically, again, and I'm all about, like you, housing affordability. What does it do to mortgages and either the payment from the interest and that, or the ongoing insurance costs? And what does it do to existing housing when you try to sell it to someone with all these additional costs?
Well, it shuts that down, but then you have to add on the paid off houses, which they seldom come into the conversation, but our elderly who have dutifully paid off their mortgages find themselves in a scenario where they're now in a flood zone or they're now in a risk area and they get a bill. They say, well, you know what? I'll just not pay it because I'm on fixed income and I can't. And so they go the uninsured route. So do you know the number of paid off houses that are uninsured right now that are at risk? Was that part of y'all's research?
No, but let me tell you what's more scary about what you just said. The person that has the home that is in a flood zone or is soon to be in a flood zone now comes under the 50% rule. And it was funny when I talked to even our own brilliant mind at Florida Realtors lobbyist, he's like, well, houses don't go down in value because, let me just use my own house as an example. I bought a little 1950s concrete block home on the water 2 years ago, 1,700 square feet, 2-car garage, and the insurance is at $250,000. So $250,000 they're saying to rebuild or whatever. But FEMA said that the house was worth $131,000, and that gives me $60,500 to do anything, or I have to tear it down and move out. Or worse yet, if a tree hits my house, if the insurance company mandates a roof, if these things happen, they go, sorry, you no longer get to fix your house. Bye-bye. I don't even care if you have gazillion dollars in the bank. So there's a component to it that I learned after Hurricane Ian. Like you, I'm always asking my peers, what did you learn that we need to know? Because for the grace of God, it could be us one day. Right. And so I don't believe everything has to be learned through the School of Hard Knocks. Let's leverage other people's learning and get ahead. Well, my friends in Cape Coral, Fort Myers, that was very, hard hit.
Oh, yeah.
They said over time, before Risk Rating 2.0, all these cities have something called a community rating system, and they would get points and they would get discounts on the flood insurance. And so every town was trying to get FEMA. So you might see in my area, my town is 15%. The county is now at 40%. So you think, oh, I have $1,000 flood policy. I get 40% off. That's worth some trade-offs. Okay. Well, guess what? At Risk Rating 2.0, people didn't realize, but most of that savings went away.
Wow.
So because when you're actuarially correct, there's 3 caps in Risk Rating 2.0 on that next show we're going to do. And they say, basically, we've given you more than that savings. So unless you have any other savings above all of this, the best way to put it is this. Private insurance on my home would be $12,000 for flood. FEMA, with no discounts because the person before me didn't have a flood policy, was $7,200. Okay. So in effect, FEMA's saving me $5,000, right? So they're saying, we're not going to give you another 15% because we already gave you $5,000. Okay. So I asked them in Cape Coral, Fort Myers, what did you learn? They said, you know what, Cyndee, we had on top of the 50% rule, a 5-year look back. And what that means is basically think about you got an allowance, but that allowance has to last you 5 years. So say that my house was $61,000 that FEMA said I could do. There's a big difference between $61,000 every day of the year and $61,000 over 5 years before you can reset. And so what we're seeing is that with insurance mandates for new roofs in Florida and other stuff, the cost of material and the cost of labor has skyrocketed since COVID, and depreciation keeps working against you.
Right.
And so all of a sudden you're just trying to, even though I have the money, I can't put hurricane windows and doors in my house because it'll put me over the limit. So
Wait. So you can't storm strengthen your house because of these made up look back limits.
Correct. Well, the 50% rule and the limit. So until I get another allowance when that time comes, then I could see about it. But I got to pray between then and there that nothing happens, because even if the littlest thing happens, you lose everything.
But is that the goal? Is the goal that you do lose everything so that you'll move inland to Iowa or something and get off the coast? Is that the goal, do you think?
Well, I think the way they say it is the goal would be to elevate homes and make them be safer. However,
but you couldn't do that because it throws you out of compliance and you wanted to.
Right. So right now in our area, just to give you an idea, that home that I just told you was technically $250 to rebuild. To elevate it is 2 to 3 years and $400,000, and you'll pay the same flood insurance.
So wait, so
you'll be safe.
Wait a minute, we're going to put it on stills.
Yep.
But we're still going to pay the same flood insurance cost.
Yep. Yep.
And we've tripled the cost of the building, but it's still worth the original cost. This is terrible math. Who came up with this?
Well, the government doesn't seem to do as well in math as you and I did, because
that's a fair assessment.
Here is my biggest thing that they've been on a new mission. So wait, let me finish on the people in Fort Myers. Here's what they said to me. And this is what broke my heart and what made me be on this new legislative issue in Florida and trying to get it for the country. They said we had a 5-year look back because we got a bigger discount. And we didn't realize the discount went away, but we still had these rules in place. And Sarasota Manatee had a 1-year look back. So they got to go home and repair their homes, and our people didn't. And so I'm like, oh my gosh, people don't even know what they've done to their residents, and people are buying homes. And my thing is, I didn't have any idea about this look back. And I came to my own county, Pinellas County. We have 26 jurisdictions. And I asked my GAD, I said, okay, just like short-term rental, can we make a list of all the look back periods of everything? Because as a realtor, I want to disclose to people. I want to say, hey, you need to understand.
Yes.
I could not even believe that we had towns that had a lifetime look back that are on the coast. Safety Harbor on the Tampa Bay had a lifetime look back. So how would you lifetime? So anything that's been done over the lifetime, and the 50% value didn't change. So now here's my next hurdle that I've been, 2 things. I started looking as a realtor, as I'm selling flood policies, how it came up in my own area. And I said, okay, I have a $7,200 policy in a town that has a 15% discount. And on my policy, it says $11. So I started collecting, and nobody was saving more than $100. And I'm like, you're putting all my life's savings, my house, everything for $11? Like, no, change it. Just recently, Pinellas County, this is the trick. I mean, this is my thing. It's not a trick. They don't mean to be tricky, but I think it's
the pathway. You're saying pathway, not trick. It's just it's pathway.
The way that floodplain managers go to conferences, and I'm convinced that they get badges on how long that look back period is. They're like, we are saving lives because we're going to force people to elevate their houses. But I don't live in the community that I'm forcing it, but that's the conference. They get that badge. So what they do is everybody will talk in these terms. And so Pinellas County just said, we got a 40% community rating system discount, the highest anywhere. And I said to my commissioners, the school I went to and learned math is 40% of zero is zero. So let's talk how many dollars you're saving for real in a post-risk rating 2.0 world, and what resiliency and what harm are you doing to the residents that you don't even know. And, the answer that I've learned, and you've been a lot in politics, so you are much more ahead of me on this. But what I'm realizing is it's a perfect example of policies made at a moment in time with rules in a certain place were made for the right reasons and people made the best decisions they could. But now, 4 years later, those rules have changed and the benefit is gone, but the harm is still there.
I mean, I think that applies to anything that's in a regulatory space, a legislative space. We don't go back and revisit. And isn't that part of being an adult, is you revisit decisions and you make better decisions and you pivot and grow? I mean, I'm kind of stuck over here on this lifetime look back. If you've got a cinder block home, which was very normal once upon a time, and it's never been touched because Mama has owned it for 60 years. And she's got a lifetime look back. She never touched it. She's the only one that's all right, except that she can't afford to rebuild anything because of the cost of labor and materials and inflation.
She's not all right in Florida because let me tell you why. And it's coming to every state. You see it now. And this is part of what was the train wreck that made me so passionate trying to get legislative attention is we are now mandated to replace perfectly good roofs at 10 years. I mean, because they'll say, we'll drop your insurance if you don't put on a new roof.
And so, by the way, realtors, you better be asking in your state, what is the situation with the roof age? Because this is a burgeoning problem. A 4-year-old roof is not trash. A 10-year-old roof is not trash.
But if it's 4 years and you're in a state with a 5-year look back and someone put a new roof on and the cost of roofs today, that might have eaten
there went their money. Oh, well, no store windows for you.
And so imagine this really happened to Mike Wyckoff, whose daughter bought a house 2 years ago. And she's young, pregnant, buys a remodeled home because, everybody likes the pretty home, all updated. And 2 months after she moves in, the AC goes out. So she does the right thing. She goes to City Hall to pull a permit to get a new air conditioner. And they said, I'm sorry, you're over the 50% rule. Now, in Florida, luckily, AC is a health and safety. What can you imagine? Like, I'm sorry, it'll be 3 years till you can get an air conditioner, but enjoy yourself. You're good. And how did that buyer have any way to know? So part of my frustration is nowhere is this posted. You don't know what the look back period is. As a buyer or consumer, you do not know what is left. So you buy that pretty remodeled home and you better pray that you don't have to do one dang thing. Like your toilet better not go out. Your plumbing better not get backed up. So flip the hat. I mean, yes, I'm super, super passionate about the consumer, but I see this as a huge legal liability for realtors.
I agree.
That if we're not telling people, so I said to Joe, at a minimum in this state, there ought to be regulation that says this should be public information so we could direct people. But let me just tell you how hard it is. My government affairs director, because he's amazing, he went to all the municipalities. I'm 18 months in now, last August. There's still 10 of them that don't know what their look back period is. So you tell me what a consumer can do.
So if
you can't tell us.
A house in Pinellas County, you got 26 municipalities in Pinellas County.
Yeah.
It doesn't matter what Pinellas County is doing because I got to call the municipality and I might get somebody on the phone that can tell me and I might not.
Right.
And either way, I'm inheriting an issue that I have no control over. And oh my gosh, this is insane. So is the fix to eliminate the look back period?
That would be the fix we can fix. So to be honest, if you're in a non-flood zone, and you buy flood insurance, you do still see some savings. But my question is, and we know this in Florida, most people that buy flood insurance are in a flood zone and mandated, as you said. So when you look at, we have a beach town right now, they've lost their mind. So let me just tell you, they have no look back and they are trying to go, they call it Elevate TI for Elevate Treasure Island. They want to go to 10 years. And I'm trying to explain to my client, I said, you understand that $2 million house you have is worth land value. You understand what you are doing. And you understand that should a hurricane, should anything happen, or the insurance says you have to replace your roof, you're losing everything. You will have the value of your land. That's what you'll have. And hopefully you don't have any mortgage because you got to pay that off. And you got nothing. I'm like, and for what benefit is my point? For what benefit? And so here's two things. In Hurricane Ian in Fort Myers and Cape Coral, some people had elevated their home. And so you're like, hey, that place has been hit a few times. Some people had already taken that step. But over time, because again, I think at this conference, they also get a badge for how high can you go. So they had elevated their house, but now the new standard was a foot higher. So they're no longer in compliant. The 50% rule says you have to bring everything compliant.
What? oh my God.
So these people that have paid, so imagine right now you pay $400,000 to Jenga your house up, to then have something happen, like some water comes through the window or something through the roof, and now you have to do it all again.
You would give up on homeownership. You would just say, I'll go rent a little condo somewhere and I'm done. That's what would happen. People will lose their life savings. They will lose their retirement hopes, and all for the sake of bad rulemaking.
Let me share a proud mama moment. So my son, who's 23 today, he just graduated in public policy administration, and they had a capstone project. They had to pick something with local government. It's a very well-respected program because it's very much like real world. And so we all know, just like we've been in leadership academies, you can make that thing silly or you can make it, make a difference. And, my house, I was like, hey, here's what you need to do. And it was this. We had one of our client and friends in Bel Air Beach said, I just got a notice from my insurance that I have to replace my roof. And every year in the last 4 years, 1 year I put a generator in my house. 1 year I put hurricane windows. 1 year I updated the plumbing. And 1 year I did a little bit in the garage, but nothing changing the footprint, the size, the function, nothing. Just maintaining a 1960s home. They had a tile roof, and they're like, I don't even know if I have enough money to put a roof, but I definitely can't put a tile roof. It doesn't matter how much money I have in the bank because I don't have enough because of this 5-year look back. And you didn't get any damage from any tree. Like, there's no room for acts of God in this. So I said to my son, I have data to help them look at this 5-year look back, and has it served its time? So he took it on. He goes to the professor, and the guy says, I'll be here to pull you back off the ledge when you go off the ledge, because he's like, that was a big, real project, right? And he did the survey, he did the work, and I learned a lot in the process because I'm super passionate about the issue, as you can say. And he's like, Mom, it's about presenting all the facts, and I'm a consultant, and let them decide. And I was like, well, I hope they make the right decision. But I do have to tell you the funniest moment, and this is when you've raised good humans to go out into the world. He interviews our local floodplain manager. He interviews me as the NAR expert with the FEMA bulletins to show him whatever. Does all of this, and he comes back to me and he says, Mom, you might want to redo your statement because it's in conflict with the floodplain manager and it might hurt your credibility. I was like, oh, no, you didn't. I was like, let me pull out the FEMA thing. Let me explain to you, like, I know my facts. I was like, so we might have a difference of opinion, but you don't have to worry about my credibility. So he was like, okay, Ma, okay.
I mean, at what point did you say to him, I used to change your diaper? You have to pull that out.
But you know what? I was proud that he had the confidence and the courage to be very direct with me like somebody else, right? And he didn't cut me any breaks in the whole thing. I was like, you live in my house. What, do I not get anything? So he presented this to the city, and they unanimously passed to lower from 5 years to 1 year, to know that that is how we're going to make this change. And that's why education and what this podcast makes a difference, is because it's going to be the residents who demand their elected officials do the right thing by them. And yes, it's a complicated topic. So people go, well, the floodplain manager said, just like my son said to me, the floodplain manager said, and I go, well, God bless their heart, but they're dealing with pre-2021 information. So let me show you number 5. And it's funny, I took to NAR what I was seeing in the field, because, we see it every day. And I said, this is not right. This no longer exists. And then finally, July of last year, FEMA published a document. Number 5 said, if you're in a high risk zone, you're not going to see this on your flood. We already have enough discount. You're not going to see it. So I was like, but we have 2 beach towns right now at the 5-year look back still. And then some was 0. And I said, as I educate the realtor community, it's going to definitely affect where people buy and what they're willing to pay for houses.
Yes.
Anyway, so here's the thing. I am a key contact for Representative Linda Cheney, St. Pete Beach to St. Petersburg, Madeira Beach area. And I went to her with this, and God bless her, she took it on and said, okay, let's see if we could get across the state of Florida 1 year so that people at least know. We can tell people this is what it is, this is what you're buying. Again, I have no problem telling people the truth, whatever the truth is, but I should be able to find the truth. Right. And so they were nervous. And so they actually said, let's study and make sure we're not going to risk losing our ability to have FEMA flood insurance. That's a valid, concern. So they got $500,000 in our Florida budget to study it this year to hopefully get forward some uniform and some resiliency for Floridians. There are people sitting there that, God forbid something happens, they can't come home. And it could be the simplest thing. And we're making dumb decisions. When I went to replace my roof last year, I wanted to put a hip roof on because we know the insurance companies like hip roofs. They're more safe, more secure. And I had this addition at some point on the back of the house, 10 by 10 room. Everybody has one. And I wanted to put trusses in and do it right. And they said, no, you don't have enough money. So I was like, well, let me slap on the cheapest roof because you're making me. And when I get a new ability to do it, I'll have to rip it off and do it the right way. But, right now I don't have hurricane windows that I could have because, again, I could afford it and I could protect but I have to wait for a new savings account to open that whole bag of money. So towns that allow no look back, St. Petersburg is our largest town, 300,000 residents. They have no look back. If they can do it, every little town should be able to do it.
Exactly.
I mean, they're very wise about, and they're managing their flooded costs and their expenses. So it tells you that, again, we just need to, unfortunately, educate enough people to go against the floodplain managers who hearts are in the right place. But again, things have changed and they're impacting the ability of our communities to be resilient regardless of what happens, what comes out.
And they don't know what realtors know. So for you realtors out there, let me just remind you, when Cyndee talks about the power of the residents, you realtors are residents too. And I think you forget that sometimes, that you bring professional expertise, but you are also a taxpayer and a constituent and a voter in these areas, and you can be a voice of change. And you hear from Cyndee, it's a process to get it fixed. It's not fast. It's not easy, but there are some bright spots of hope in the Florida market on this. And we all know that as California and Florida go, so go the nation. If you are a Florida realtor, please reach out to Cyndee and ask how you can help in your community. Figure out what you can do to get your legislators to help with the study project and be a part of this solution. And you don't even have to lead the way, because we're all fortunate to have somebody like you, Cyndee, that's willing to dig in and do all the hard work. And now that you've raised a public policy guy, he can help out too. And that's not a bad thing either.
I know.
And if you're in another part of the country and you don't know if this applies to you, please reach out to either one of us and we'll help you connect to your government affairs director in your state. There are always things that you can be on alert for. And this is going to be part one of the insurance series with Cyndee. Don't worry. We'll have a couple more episodes as soon as we get the time scheduled and make sure that you are the most educated realtors and consumers on the planet, because that is critical to us preserving homeownership. Cyndee, thank you so much for this much of all of your information. I can't wait to have you back to talk about some more stuff. And y'all should ask in the comments if you have questions or you're hearing things, drop it in the comments, and then Cyndee can be prepared for part two whenever that happy day comes. But so grateful to you. Thank you.
Thank you for the opportunity to help educate more people about this important issue.
It's how we roll. All right, friends.
All right.
Tell to subscribe. You don't want to miss it. And then say something nice, and we'll see you next time. As always, I'm so super thrilled that you joined in for more crazy shit. And if you're a realtor, investor, inspector, lender, or just a regular human being who happens to have an unbelievable story that you need to tell the world about, or frankly, you just need to one-up the story you just heard, then make sure to DM me on Instagram at Leigh Thomas Brown, or tweet me at Leigh Brown, or frankly, any social network where you hang out. I'm there. And if you had some fun, then you totally want to subscribe so you don't miss out on any future episodes.